Hello. Hey, hi everyone. Thanks for joining in. So my name is Divyanshu. I'm taking care of the strategic alliances and partnership at KredX. And the agenda for inviting you all for this webinar were actually in a way threefold. One was I wanted to talk about the current market situation that we see in terms of talking to our businesses and talking to our suppliers who are working with us, who are active with us, how their businesses have been affected because of this COVID pandemic. Second, I want to talk about how credex in a way has evolved as a company in terms of our offering. So we have a product for as very small SMEs, MSMEs, for mid corporate as well as for the corporate. So as a partner, as a business partner, just wanted to run you through these products so that when you are talking to your client, any requirement of such sort your client has, that is something I think we can fulfill through credex's offering. And a third, which is the most important part, I just wanted to touch base with all of our business partner. We feel in our community, business partner plays the more important role in terms of building up the business for us in terms of the relationship. And obviously, we help you out in serving your clients and managing that part of the relationship. So these are a threefold kind of agenda that we had in mind today. So before I start, I would like this. I'll run through the presentation really fast. My more emphasis is going to be the question and answer. So during the presentation, if you have any questions that you want to ask about credex, about our offering, or any other general question also, just bottom of the tab you can see Q&A section. You can just put your questions there, and I'll be happy to answer maximum number of questions at the end of this webinar. Right. So I'll start right away. Uh, so when we speak to the businesses working with us in terms of the impact of the COVID-19 on the business, what we are seeing is the business really being effective, more in terms of the cash flow uh, uh, part. So they've had invoices stuck on their buyers, which are in a way delaying the collection for them. So even like 90 days invoice is not getting paid in 120 days, 150 days. So it's kind of the cash flow stuck for them, for which they were planning to use the cash flow for maybe preparing for the next kind of paying out their labor. Some of the impact is some of the impact for some vendor is so high that they have imminent threat for the survival only. Some have a supply disruption. They have maybe consignment already ready in the warehouse, but they're not getting any trucks or any other logistics arrangement to move that consignment to the buyers against the purchases the buyer has made. And the last, which we are seeing everywhere, is the demand dip in the demand orders. So demand, obviously, in terms of consumer demand, is also gone down in terms of a demand from the large corporates, because the consumption itself has gone down, has is really affected for these businesses. These, although you can say mid-market or large corporate is relatively safer, but for SMEs, small businesses who actually had cash flow churning, because of which they were surviving the markets, kind of getting very difficult for them right now at this juncture. Obviously, the pandemic has affected the entire landscape globally, but India, in a way, has been one of the country which has been impacted the most. You must have seen in terms of the IMF forecast, which are actually a tiny bit of growth that they had showcased when we started with the lockdown, but now that has turned out to be almost 1.5% negative in terms of the GDP degrowth for this fiscal year. So as a country, we are one of the most impacted country because of this pandemic, and the ultimate impact of this is the increasing of the working capital uh, for all these businesses. So right now, for them to have labor shortage and other parameters, maybe the priority 2 or priority 3, but the working capital gap is something that everyone is kind of getting impacted because of. So obviously, there's a need right now for these vendors or MSMEs to have a robust cash flow management strategy in place, because they have to survive for next 6-8 months before the business actually come into place the way it was almost 3 months back. So in a way, they'll have to survive these 6-8 months, and for that, they have to have some kind of strategy in place so that they're able to manage their cash flow and do not run out of it. Otherwise, they'll have to shut the shop, and it's going to be like impacting them as well as their employees, as well as it's going to be a kind of a ripple effect into the market. So really, everyone understand why a business need cash, right? They have to have seamless business operation. They have to cater to demand that they're getting from the buyer, and they have to or will they ensure long-term growth for themselves? So cash flow is kind of the king for everyone. If you want to accelerate the business growth for any such matter, I think money plays the most important part in every circumstance, right? I want to talk about the two kind of capital that is kind of related to what credex is offering also in the market, and that's kind of very much necessary for a business to grow and maintain their runway. So one is the working capital. Obviously, as the name suggests, it's more of a taking care of the operating expenses, day-to-day operating expenses of the businesses, for example, payroll, account receivable, etc. And second is the growth capital. So let's say some business has some kind of recurring revenue or long-term agreements, and that is the capital that they are going to get in maybe 2 years or 3 years period, but they need an urgent capital today as well in order to grow, in order to maybe purchase a new warehouse, in order to purchase new consignment, or have kind of new growth capital in place, right? So it could be a purchase of equipment, it could be expansion plan, etc. So why I would specifically want to touch about these two capital, this two type of capital is more towards how credex is helping our businesses who are in the need of working capital or growth capital. So I'll talk about that in later stage of the slides. So right now, what we think is the business should focus on alternative lending, because we believe that it's going to be a sustainable option, because in the current scenario, the loan disbursement from banks or NBFC is going to be conventional. These people are, everyone is kind of more focused on the collection part right now. And, loan disbursement has become more stringent. So everyone who can expect a loan maybe 3 months earlier cannot really expect the same quantum on loans from banks or NBFCs. So this is where we understand that alternative lending can play a very important role for businesses to get the capital and actually grow. So the generally alternate lending is very fast that to acquire. It's a very easy online digital process that onboarding takes place for any vendor or any customer that actually requires is alternate lending. And the best part is it's all online. So there's no need, especially in the current case of lockdown, right? Sharing the hard copies, etc. It's going to be very difficult. So alternative lending solves for it, but collecting all the documents in a digitized format. Right. So with this, I think I've set the base for what we are seeing in the market and what kind of capital requirement is there from the businesses. Now I'd like to introduce credex. The idea about this is I want to talk about credex and the offering that we have, so that you understand what kind of pitch or what kind of offering you can give to your existing client. So credex was actually founded in 2050. Till then, we have discounted more than 5 lakh invoices. And the idea about credex was to bridge the working capital gap between the payables, receivables, and other financing requirements of the businesses. So essentially, we are a technology platform. On one leg, we have as vendors or suppliers or corporates or SMEs raising invoices on the corporates. And on the other leg, we have investors who are like almost 10,000 active investors we have on the platform, which are like HNI, Ultra HNI, NBFCs, family offices, HUF, etc., who purchase these invoices once we list this on the credex's platform, right? So what we provide to investment is investors kind of short-term alternative investment option, and obviously we provide the cash flow, working capital flow for the businesses. So in terms of offering for the businesses, so businesses here means SMEs, MSME, and the mid-market kind of businesses who are in a way engaged with large corporates or large enterprises. Either they are raising the invoices on these large enterprises, or maybe they have some kind of recurring rental agreement or recurring revenue from these large enterprises. So the solution that we have for these SMEs or the vendors or the suppliers is one is invoice discounting, and the second is the credex plus. So invoice discounting, I'll just talk about invoice discounting first. So this is about a simple process wherein a supplier, let's say, has raised the invoice to a corporate. Corporate says this, the invoice is good to go, it's unpaid and it's good to go. Then the supplier raises the invoices onto the credex's platform. We have, like I talked about, external investors who are purchasing the invoices within, let's say, 15 to 20 minutes. And the fund transfer happens from the investor escrow account directly to the supplier's working capital account. So this is the way we are operating. So essentially, when the supplier is listing the invoices, they're getting the money upfront within 24 to 72 hours. So obviously onboarding of the vendor is kind of digital, so it's easier for them. They have to submit the digital copy of the invoices for our verification and for acceptance from the corporate. And it's kind of one of the easiest way in which they can attain kind of cash flow requirement against their invoices. So if we talk about numbers and the USPs that we have, this is entirely collateral free, and that is the major and foremost kind of USP for us. Work on a quick disbursement model. As soon as the vendor raises the invoices onto the platform, they get the money within 24 to 72 hours. It's properly digitized process. Till now, we have helped close to around 15,000 small businesses. And if you talk about the number of invoices that we have financed till now, it's somewhere in the upwards of 5 lakh invoices till now. We have offices pan India, so we have people working in large metros, even in tier 2 cities, who can take, you can meet the client, probably not in current COVID situation, but who can meet the client and have kind of face-to-face discussion in terms of their onboarding and their expectation, and we providing a solution in terms of working capital to them. So CredX Plus, like I talked about, it's more about growth capital. Uh, so let's say some business has kind of a recurring uh, revenue, and that is month on month or maybe a particular period of time and a recurring revenue. So rather than that business having to wait for month on month to get the cash flow and then utilizing that for growth, what we are doing essentially here, we are discounting the entire cash flow that they are expected to get in say 18 to 24 months and providing them the entire funding upfront. So that kind of helps them out to get the cash upfront. Maybe they can proceed ahead with their own, considering that this as a growth capital, they can proceed for business expansion that they had already planned rather than having to wait, month on month. So that is about CredX. The process that we follow is something similar to invoice discounting only itself. What is critical here is the agreement part, because we want to look at the agreement which the vendor has raised or the business has raised, has agreed with one of the enterprises through which they are getting regular revenue from them. Right, so they approach CredX with the prerequisite list of document, mainly being the agreement. Once CredX identifies that the document is perfect in terms of our requirement and our underwriting process, what we do is we ask the business to list that invoices or the agreement onto a platform, and again the same process of our investor purchasing those cash flow come into picture and the money gets transferred to the business. So again, this is also entirely collateral free. So that's kind of the main USP for us. The other USP is obviously the cash flow offering that we have is off balance sheet. So it's kind of raising debt without actually showing that in your books. So it kind of helps out any business improve their financial ratios, maybe improve their financial rating when they next time go into the market for taking some kind of loans. Right. So this was about offering for SME and MSMEs or mid corporate client. We have certain solution for corporate client as well. So large companies, if you are in touch with, if you have like a regular interaction with, this is the three products that we have for large corporates. So one is a payable discounting, which is directly for the corporate, and second is a receivable discounting, which is for the corporate suppliers, and third is a CredX service, which is more like a technology or SaaS platform that we provide to corporates. So I'll take each one of these individually. So payable discounting is kind of enterprise focused cash flow solution. What happens is, let's say, I think this diagram kind of helps. What happens is, let's say these are the suppliers, warehouse and logistics are raising invoices on the enterprise for a service that they have provided to the enterprise. Let's say they have a tenure of 60 days in which the enterprise has to pay to them. So what CredX does essentially is, we pay to these service provider on behalf of the enterprise, let's say in 68 day, and we ask enterprise to pay back to CredX in another, let's say, for example, 60 days only. So essentially what we are providing to the enterprise is the extent of their credit tenor from just 60 days to 60 plus 60, which is 120 days. So this is how we are operating. This is what is something we call as payable discounting for the enterprises. Right. So enterprise in a way enjoy a credit tenor which is much larger than they originally used to have. So obviously, first point is it helps to increase the credit tenor. It improves the business efficiency of the corporate, because they are cash flow working capital for them is kind of secure now. They have good supplier relationship because they're not delaying any payment to the supplier on the due date. So that kind of also helps them to nurture and grow their supplier base. Plus, obviously, it's kind of healthy cash flow management for the corporates. The second is a simple receivable discounting for supplier. So let's say an enterprise we can approach an enterprise. An enterprise can work with credex in terms of offering discounting of bills raised by their suppliers to the enterprise. So we can help the suppliers directly in terms of giving them the money upfront. Let's as soon as they raise the invoices onto the credex's platform. So let's say some supplier is raising an invoice of 90 days to the enterprise. As soon as they list the invoice onto our platform, it gets the money upfront within 24 to 72 hours, rather than having to wait for 90 days from the enterprise. And the end of the enterprise, at the end of the credit period, we are collecting the payment from the enterprise on behalf of the vendor. So this is how the process also works. It's simple, something similar to was invoice discounting I've talked about. Supplier raises the invoices, corporate approve the invoices. Uh, Once the invoice is approved, the invoice is listed onto the platform, and the external investor that we have on our platform purchases these invoices, and the supplier gets the fund within 24 to 72 hours. It's kind of something similar to invoice discounting. Uh, Again, the benefits are something similar to invoice discounting. It's entirely collateral free, very easy fund dispersal, very easy onboarding and digital onboarding. So the process of vendor approaching us or an enterprise approaching us and then we starting the first discounting is very less, and that's kind of a very good upside for us compared to other financial institutions that are actually into this same domain. So third product is basically software as a service, or maybe you can say a early payments technology. So this is in a way to help out any corporate that has treasury surplus to pay their vendor before the due date in return for some discount from the vendor. So let's say a corporate A has 100 vendors. What we do in credex is integrate with the ERP of the corporate A, pull out all the invoices of the vendor of the corporate A that the vendors have raised to them. We show them all these invoices, and then if this corporate A has treasury surplus, what they can do is they can give in a communication to all their vendors that I'm ready to give your invoices. I'm ready to pay your invoices today, rather than you having to wait for another 60 days as per our agreed terms. But what discount can you give me in return for that early payment? So it's kind of a price discovery mechanism in which treasury, what they're doing essentially, they're investing their money into liquid funds or FD and earning a return of maybe 6 to 7% maximum. But through this technology, they are funding. It's a risk-free thing first, because they are there, the corporate A supplier only. They do not really have to bother about somebody else's supplier. Plus, the return historically, what we have seen that the corporate earns through this mechanism is around somewhere around 15 to 16% per annum. So this is almost like double, 2.5 times of what they should be earning through their corporate treasury if they invest that into FD or other treasury funds, right? So this is how the technology works for credex early. Like I talked about, corporate receives the supply invoices. Supplier in return for early payment provides discount to the corporate. Corporate, whatever treasury surplus they have, they deploy in terms of paying the supplier early in return for the discount. Supplier obviously benefits from the faster cash cycle, and corporate return on the treasury is risk free. Second, it's very high in terms of the returns. So like I talked about, is almost 16% we have seen as the average return. It's a zero risk investment. Corporate has complete control over the earnings and the suppliers. And it's a cloud-based portal, smart algorithm that we are providing to all the corporate that we are dealing with right now. It also helps the supplier for getting the money early. So we are working with almost 100 plus corporate under this mechanism, and it's just not limited to just India. It's kind of a global landscape under which we are providing this kind of facility to the corporates. The last thing that I want to talk about is about for investors onto a platform. So the things I've talked about till now was more towards on the business side. So this is like I talked about credex being a platform, we have investor on the other leg. So these are basically HNI, ultra HNI, who are getting a healthy return of 12 to 16% on whatever they invest on credex's platform, right? So it's kind of high return, low risk. Since we're working with genuine corporate, plus our risk underwriting due diligence is also very robust. Plus a quick maturity, because we are putting up deals or you can say invoices onto our platform, which are maturing in somewhere around 30 to 90 days. So this is something we offer to investors. The reason I wanted to talk about this to you as business partner was, if you have any kind of financial investor or a kind of people who have surplus money would be interested to invest into a platform, they're more than welcome, and we can work with you to onboard them onto our platform. So this is the process that we follow for any investor. They log into the CredX's account to provide them dashboard access and app access through which they can see the deals that are actually listed onto the CredX's platform. They choose the deal basis their comfort, basis our CredX score, and then funds are disbursed from the investor's escrow account to directly to the vendor. Now, upon tenure, we collect the entire invoice value from the enterprise, and then CredX transfers the amount whatever they have funded directly to the investor. And this is how the complete transaction closes. The investor in the end makes a return of somewhere around 12 to 20% in a very short duration of time. Right now, we have a very healthy base of almost a single largest investor having an AUM of almost 100 CR. Average AUM, if you see, is somewhere around 10 to 30 CR. So we are talking about large investors, ultra HNI, NBFCs, family offices, kind of, are actually kind of interested in this kind of alternate earning source or alternate investing source that they can explore also, right? So the last thing that I want to touch about is the business partner program. And since I told you, like, business partner is one of the most important vertical for us, it's the most important pillar for us. Almost 50 to 60% of our businesses is generated through business partner program only. And this is why we will see constant engagement from our side happening in terms of apprising you of whatever new product that we have bringing into the market, as well as training you about how we can engage together with a particular client of yours and onboard them to the CredX platform. So I think most of you are probably majority of you might be knowing this process. So you come to us with your requirement, we onboard you as a business partner, we sign in kind of a two-way agreement with you. We work together with you to onboard your client. We keep you completely in the loop in terms of what is happening, what are the challenges if there are any, and what kind of business limits your client can expect, and what kind of charges that we have set up for your clients. So we keep you entirely in the loop. Once your client is onboarded, they can list their invoices, and we are funding their invoices again, same 24 to 72 hours. Right. So the good thing about hand holding you as well as your client is we'll have a dedicated relationship manager. This is very specific to the business partner program. We'll have kind of dedicated relationship manager for you to help out your clients. We provide you a dashboard access also, through which you can track what is the kind of stage your client is at, and who's the particular RM who's handling that particular account, right? So one thing is very important. We have kind of revenue sharing, which is kind of one of the best in the market. So in terms of quantum, when I say best, it's more like the credit line that we are setting up for any business is very high, and the percentage of the fee that is being charged in terms of the credit line that we are setting is also kind of on a higher side for us. So a percentage of that is something that we are sharing with you. So in terms of absolute quantum, the payout that we have with any channel partner is one of the best in terms of other financial institutions in the market. Like I talked about, we have dedicated relationship manager for you to manage the client, and we make sure that your client is served in the best possible manner, so that you are happy in terms of our performance, and client is obviously kind of onboarded in the most seamless manner. We provide very high sanction limit. Let's say bank is providing X limit, our limit for the same claim would be somewhere around 3x to 4x. That's kind of the advantage with us. It's an entirely off balance sheet funding, like I talked about earlier. They do not have to show this as a loan into their books. And then there's obviously no collateral associated with the limits that we're providing to their clients. These are some of the clients that we are working with. I think these are just some. We have other 100 plus corporate that we're working with. These are some of the names probably you can relate to, or maybe your supplier, maybe your client is supplying to. So specifically, I want to touch about our investors also. We have recently raised Series B from Tiger Global in December 2019. And if you see the investor, we have really good marquee investors associated with us: Secure, Prime, Tiger Global, etc. Right? And we have been in a media coverage. If have for very long now. So yeah, that's about from my side. Any question that you have, you can just put it in the Q&A section, and then I'll just take it individually, and I'll try to answer maximum of these at this moment. So I'll just wait for 1 minute and start on the Q&A. Meanwhile, if you have any question, you can just type it in the chat box. Okay, so I've got my first question. It is basically, what is the process of onboarding any supplier in terms of invoice discounting? Okay, so the first step in this is we want to understand which is the corporate that the supplier is supplying for, like whether that corporate is approved in our as per our underwriting parameters or not. So once you give us the name of any such a corporate, we'll be able to revert back to you about this acceptability within 24 hours. So that is the first step. Once that corporate is approved, uh, the next step is to onboard and collect some basic documents for pre-sanction level from the vendors or the suppliers. So this is about collecting the balance sheet. This is about collecting KYC document, etc. So once that documentation is collected, next step is about giving that to our underwriting team or the risk team for coming out with a sanction letter. The sanction letter essentially talks about the credit line we set up for your client, what are the charges, and what are the basic other terms and conditions that we'll be working under with your client. And the last step is post-sanction documentation, which is about post-sanction onboarding. Once that post-sanction is over, so that is a kind of a simple documentation post-sanction. Once that is over, the client can, it's about changing the what enterprise has been paying to supplier going forward. That has to be changed to credit escrow account now. So that since we are paying 80% of the invoice value to uh, the vendor upfront, we collect 100% from the enterprise end of the credit cycle and then settling the remaining 20%. So the escrow account has to be changed from CredX to the CredX's account in place of the current arrangement of giving back to the vendor. So I've got a question, how to become a channel partner with us. So we have, if you go to our website, there's a section called Partner with Us. You can register there, and one of the team members can reach out to you and onboard you. We'll take some basic KYC documents from you, and as well as we'll share with you the channel partnership agreement that you and CredX can sign together, and then you can be onboarded with us. We'll give you a login ID as well for you to refer any cases directly through that. Another question, will you be funding corporates availing working capital limits from bank? Yes, we can definitely look at corporates already availing working capital from banks. Ideally, in such cases, if the charge has not been created by the bank, we are not really asking for the NOC also, because it's an off-balance sheet solution that we are providing. But we are definitely, obviously, some vendor or some business is already banking with some bank, right? These are the people who come to us, and we are more than happy if somebody already has working capital with the bank. We are not competing with the bank. What we provide is kind of the additional limit over and above the banking limits. So it helps vendor in terms of maybe seasonal demand, maybe they actually have demand right now itself that is not being fulfilled by the bank limits. Any other question? Guys, I'll wait for 30 seconds more. Sure. Amit is asking actually any product training possible post partnering so that we will be confident in front of the client. Absolutely. So this is the way we partner with you as well. So first step is obviously the onboarding of you with us, and next step is we want to teach you in the best possible manner. We have kind of a you can say a kind of a corporate brochure that we share with you, how you can represent us in front of your client. Missed this question earlier. What was the CredX disbursement during COVID months from March 2020 to June 2020. So it was actually pretty good for us, especially in March. We we were running at a run rate of almost 150 CR disbursement month on month. COVID situation obviously took an impact and the business is down not much, but somewhere around you can say 20 to 30%. But we are still running at a healthy run rate of upwards of 100 CR per month. June, we still don't have the figure, but I think June should pick up. What we are seeing the last 15 days, because the businesses are now opening up, we are seeing lot many invoices coming from vendors. Okay. So one question is, what should be the size of corporate for payable discounting? So again, depends. Generally, it's not just on basis on the size. It's also about the balance sheet of that corporate. So just to give you a ballpark figure, we have had corporate approved which are somewhere around 300 CR or 400 CR worth of turnover also, and it frankly depends on the balance sheet, on the cash flow, what has been the payment cycle for that, and the uh, payment in terms of acceptance payment giving out to their vendor. So that kind of 4 or 5 parameters kind of very critical for them. But having said that, it's kind of easier for us to evaluate any corporate that you have in mind. You can just share us with the name and we can come back to you, like I said, within 24 hours, whether the corporate is approved for payable discounting or let's say for receivable discounting as well. Okay, so in case of collateral free products, what are the disbursement criteria? Right. So yeah, one important thing I want to highlight is how kind of in terms of our underwriting we're different from a bank or maybe a traditional financial institution is we are not doing balance sheet basis underwriting. We are doing cash flow basis underwriting. So you're more bothered about cash flow of the particular vendor with an enterprise he's raising the invoices to, and just to say, let's say somebody has kind of small losses also in last year, but the cash flow that the particular vendor has with the enterprise is kind of good, we are okay to consider them also and providing them some limit. Now, limits also depend on the cash flow. Let's say somebody has 5 corporate and they have 100 CR exposure to these corporate, right? But in my system, out of these 5 corporate, I'm okay to work with 2 corporates. And let's say the exposure is somewhere in 20 CR. So I'll set up a line basis that analysis, and we make sure that the line that we set up for the vendor is kind of sufficient for them to invoice discount all the invoices that they have pertaining to the approved corporate. Second, let's say somebody utilizes a line to a higher extent, any kinds of needs and additional limits, we are happy to do that. It's not kind of a annual renewal that they have with us. We are comfortable seeing any change of limits on the higher side once kind of the existing limits is utilized to a certain level. Another question is, do we finance import invoices and how it works? No, actually, we're not financing currently any import invoices. Our focus is currently entirely into domestic trade. One product, the KredX early, is kind of the global list. All are more towards Indian SME and India. Any question, any further question or queries you have, you can obviously reach out to us. We have the email ID partnerships@credex.com. And you can always go to our website as a tab, partner with us, and register yourself to be onboarded as a channel partner. And we'll be happy to help you out in terms of handholding, in terms of any training required for you and your employees, for you to better represent KredX and its offering in front of the client. So again, reiterating the same thing, please remember that business partner is kind of the most important vertical for us, and we really want to focus on engaging with you more. So keep an eye on terms of any new engagement that you see from our side, and obviously individually we'll reach out to each and every one of you for onboarding you to our panel. Right? Thank you very much. Thank you for joining for